Hello. Yes, guys. So, good day. Welcome back to my channel. So, this morning is going to be a brief one. About 2 days ago, I posted this trade entry in my group. I actually posted it there for people to execute the trade. So, I posted it there, indicated the entry zone and then the take profit levels. So, this is the chart basically. So, I actually used the fib to show a chart, and then I show the OTE entry levels, and the price has traded into the OTE, and this is the take profit level 1 and then the take profit level 2. So as price traded into the OTE, I just use the fib to indicate where possibly you could have executed the trade. So this was where exactly the time that I posted this chart on my page, showing them that price has gotten to an ultimate trade entry level and that they should execute the trade. I don't usually have to explain sell here, buy here. I should believe that by now most people on the page are well informed about how to go about trading. So if you're on the page and you are not really well informed about how to execute trades and all that, this is the opportunity for you to gain more knowledge on every single tool, every single information I put up here. You have to be abreast with the information I put on the page, because I have my trading strategy. Okay, so if you want to be abreast with the strategy, I'm going to begin a new beginners class for you all. If you are already a trader but you seem not to be abreast with smart money concept strategy, I want you to join my beginners class. I'll put the link in the description box for you to join my beginners class so that we take it from there. All right. One of the important things is to be able to learn new things. Okay. Some people feel that I know my way around Forex. How consistent are you? How profitable are you trading the market? All right. So this is going to be the gateway for you to begin to learn afresh. All right. So quickly, I'm going to give you a breakdown of the chart of whatever I posted on the market. I posted on my page 2 days ago, and then I will see the outcome as of today. All right. So when I posted it, I asked, what do you see on this chart? I asked the question, what do you see? And then I went ahead and I posted I added the fib levels showing where you are supposed to enter and take profit levels. All right. So quickly, let's go to my chart, and then we see how far the market has gone in respect to whatever I posted on the page. So quickly, you can see from my chart that price has actually traded far beyond this level, and you could see. So funny enough, I'm using a different machine for this setup, and this computer is more of this computer. You could see that the fib level that I've said here is different from one that I used on my other machine, on my other computer. So you could find that the take profit levels here are wider than what we have on the chart. You're right. So you can have a look at it for yourself. So the take profit level 1 is beneath this, just beneath this low. Okay, and then the take profit level 2 is beneath this, into this, almost into this other block here. So have a look at it well. So let me zoom out for you to see. So the first take profit level was beneath this side, and the second take profit level was inside this area, which, let's say, we're ultimately hitting the second take profit level. All right, let me take off this fib and make the chart clean and give you a clear picture of what actually transpired on the market. So a few days back, I saw that market was actually trading. Let me go to the weekly time frame. A few days back, I saw the market was trading and went into the high, took down this high here. This the buy side liquidity resting above this this high in here. It traded above it and then it retraced deep down into this side, but didn't take down the low resting in here, and then it continued up, came to take the buy side liquidity resting inside this area. All right, now beautifully, as price traded into this upside and took down this liquidity, I noticed that price was not going to leave this signature of leaving all this fair value gap resting. So I was even looking at price trading into this, the low of this particular candle, either taking it down or either driving into the fair value gap resting in this weekly time frame. All right, but then let's go to the one daily time frame. On the daily time frame too, I saw this and I noticed that this fair value gap resting in here, and then this fair value gap resting in here, probable area where price could drive into. So watch this. Price was actually ranging, was trading from a certain high to a certain low, and then we had a break of structure in here. So when price traded and formed this low and then came to form this low, price traded and took down this high in here and went all the way up, and then had to retrace back into the ultimate trade entry level, and then it had to short up. It shot up all the way to take down all these highs, and consequently what I'm usually expecting is I'm even looking at price coming into this range, into the main threshold of this range. Okay, price retracing back into this range, and probably either a consequent encroachment halfway into the mean or the other fair value gap here. Price can trade halfway into the fair value gap here, or close in fully on this fair value gap before we look at probable continuation to the upside. Okay, either way, there are more fair value gaps resting below this side that I'm seeing that price should be able to, close in on them. All right, so basically that was what I saw on the market. And then beyond this, beyond the fact that I'm seeing that price is driving to sweep the liquidity resting below, what else did I see on the 4-hour time frame? Beautifully, on the 4-hour time frame, I saw that there was a structure shift. Okay, there was a structure shift. So we had a low, a high, a low, a high, a low, a high, and then we had a lower low. Okay, then I noticed that there was a shift in structure. Quickly, this was the pre-information. This was what pre-informed me about this entry, that price has shifted structure through this. It broke the low resting in here. When we are in an uptrend, we are not supposed to have lower lows. Okay, then we had a lower low here breaking the structure. Then I expected price to retrace back into the OTA, or the ultimate trade entry. And why did price retrace back here? We have this continuous order block resting in here. So this is an order block. These two candles resting in here are order blocks. So if I have to set my price, if I have to set my candle in here, you could see that it traded into a little bit of the mean threshold of the second order block here. Let's go down to our 1-hour time frame and see what happened. So look at where price retraced into. Beautifully, there were a couple of other blocks that were formed inside here. So you could see that this continuous order block, or this last candle forming the order block, and the price traded deep into it, retraced. So price was just actually trading into the order block, and you could realize that at this point price couldn't hold it, and then it broke down further. All right, so you could see on the 4-hour time frame that price actually traded into the mean threshold of the second order block resting in here. So if you had executed your trade here, your stop loss would have just been a few pips above the high here, and then you are good to go. And look at it, if you took the trade here, how many points? Beautifully, 75,930 is good money. It's good money. All right, so basically that is it. There was a shift in structure. And we expected price to trade. So if you executed a trade in here, what is your risk to reward here? If you executed a trade in here, what's your risk to reward? Okay, so assuming you are leaving a few pips above it, and let's say this is one, so we have our reward of 1, 2, 3, 4. Beautifully. I mean 1:4. If you are going to risk $5 for $20, or if you are going to risk $20 for $80, or if you are going to risk $100 for $400, if you're going to risk $1,000 for $4,000, that's good money, man. That's good money. All right. So this is basically a quick brief update on what I posted on the page. So sometimes this is just to give you a clear understanding of why I post certain entries on the page. All right. So until then, I'll still post the link to the new traders class in the page. We are officially going to begin on the 2nd of September, 2nd of next month. Yeah, official. That's when I'm going to begin. Sorry. I had this here all this while, sorry. So we are going to begin on the 2nd of so that should be somewhere next week Saturday. Yeah, so next week Saturday we are going to have the beginners class. If you're on the page, I've been communicating a few informations there and all that. All right. So basically, I am a child of inner cycle trader. I'm a child of ICT. All right. So I wish you all the best in your trading. A quick one on volatility 75, so you could see how the asset is faring. Volatility 75, is still plunging higher. As I told you on my previous video, you could see this fair value gap has been filled quickly. This fair value gap has been filled, so I'm still looking for higher prices, but then it won't be any surprising if we have some sort of retracement back into these levels, and then we continue up higher. All right, so until I see you in the next video, I wish you all the best. Enjoy the rest of your day. See you.